there guys, it's Joel here from Aussie Chart Trends. Today's market update is for the week ending Friday the 28th of December 2012. We're going to check out the S&P and then we're going to take a look at the asx200. Before we do that guys, I've just got to remind everyone as per usual, and I hate to say it, but I do need to remind everyone that AussieChartTrends.com.au and this video are for educational purposes only. Nothing stated at the site or in this video is intended to be used as any form of investment advice. I'm not a licensed professional. You need to make your own decisions regarding your investments. I'm just here to help anyone searching for a practical direction in today's markets. Of late, we've been looking at the smp500 for this inverted head and shoulders pattern. Now that's where we have a left shoulder here, a head, and a right shoulder with our handle pattern breakout above this red neckline that we've got drawn here on the chart. Now, a break above this area with a sufficient back test that holds, you could expect that our measurement for this target would be around that 1530 area by measuring the depth of this pattern and then adding that simply on to where the market broke out. But as you can see, the S&P 500 has come up to overhead resistance from our triple top formation, and then we've seen the market come back down for a nice back test. It held. As we can all see here, the market rallied up and then lost that momentum and got below that neckline. And later on this week, we were actually discussing about this blue support line and that it had busted. So that was another area that has shown a sign of weakness that this pattern may be failing. Now, 2 out of 3 inverted head and shoulders patterns usually work. This may be one that doesn't work. Overall, though, there is one new thing that I do want to put on the table. And just going back to this triple top formation that we had over here, we've been focusing on the peak here where we found an area of resistance. But the bottom support lines, if we just get this bottom trend line here, this yellow one, and I just extend it out, you'll notice that if I extend this trend line out, you can see where the S&P 500 has found an area of support. After I encoded yesterday's video up onto YouTube, I was sitting here wondering why the market stopped where it did. Why didn't we just plummet down to this level? And usually there's a technical reason why the S&P found put on the brakes here at this area. It looks as if that we have found an area here of support on this bottom trend line. So all the people that had changed shares between this bottom boundary line, well, this is where the markets have found an area. And this may be able to save the S&P 500 from heading any lower. But if we do break this trend line here, we would have to be fairly cautious. And the tech book does say that after breaking a support level of the right shoulder, which is around this 1415 area, as you can see along this left shoulder, we had a number of touches of support here after we've seen the markets come down and fulfill that triple top formation. And now that we got over this area, we found a level of support around that 1415 area, but now it's showing that there is a sign there of weakness and that this market may be producing a failed pattern. But I'm not going to give up on it fully yet because we have seen this before. I'll go into that in a moment. But usually, guys, after breaking a rising channel of this sort, bound between this bottom blue line and this top blue line that I've got drawn on the chart, you'll usually see a move back up to retest and back test this area. So I would expect that the S&P 500 would potentially come up in the following week, and we would rally on up to retest this overhead resistance around that 1435, 1438 area. And if we can get over this area, including that overhead resistance from our triple top formation, well, we would have a good chance of getting up to that 1530 level. Now, I'll just show you on an extended chart another inverted head and shoulders pattern that we had in 2011. All of 2011, we produced a very large head and shoulders top with our left shoulder, a head, a right shoulder, and then we had the breakdown, which when we measured the depth of the head and we add that onto where the market broke, we had a minimum expected target of around that level there, around, what was that level? Of around 1157, and as you can see, we had a lot of whipsaw action here, a lot of volatility, and guys, it was almost impossible to chart this market because there was a lot of conflicting patterns at the time. But one thing that I can say is a benefit of reading charts and doing what I do is when we were up here, we knew when the market started to come down and that there was a good chance that we're going to break this this lower boundary level of support, that the news was going to turn bad and that we were going to see a fairly substantial correction. Now, at the time, it was uncertain to know whether this was actually a market top, because it did look very similar to the top there that we had in 2007. But overall, this is where the money printing started and the political things got sorted. Looking at the week ahead, let's see if the S&P 500 can come up to back test this blue line here, or this overhead resistance line here around that 1435, 1438 area. But we do have a lot of overhead resistance now, and it would take a very bullish pattern to get this market up and going. Alright guys, so that's pretty much it for the S&P. I know it's been a fairly in-depth update on this market, but at the moment we really need to keep a lookout, because there is a bearish possibility that I've mentioned once before, and that is, if we have a look on the daily chart quickly, a very complicated head and shoulders top, where we would have this blue line here as our neckline, and a left shoulder here, a head, and a right shoulder forming. So if we were to come down and take out this area here, and another rising area there of support around that 1360, 1350 level, well then the markets would be in a lot of trouble. And the only thing that I don't like about this pattern is it doesn't have the symmetry of a head and shoulders top. Just because the angle is leaning upwards, it doesn't really fit what a head and shoulders topping pattern would produce. However, we do have to keep an open mind, because if we did come down and take this area out, there's a very high possibility that the S&P 500 would be in a free fall by measuring the depth of the head just roughly, and say if we were to break down over here somewhere, we'd be looking at a move down to around that 1200 level, and we'd probably most likely get an area of support there, interestingly enough, on that inverted head and shoulders pattern we were talking about before. So that neckline would probably produce a nice bounce for the markets. So I won't get too full on with the predictions, but overall just keep that on your radar, that may be something that's maybe a long-term pattern that might be forming, but we'll have plenty of warning to get out of the market when we see these areas of resistance break. Alright guys, let's take a quick look at the asx200. Looking on the daily chart here, we've watched the asx200 ever since early November. We hit a low there of around 4,330 level, and then the markets proceeded to go up. And guys, now we're approaching that 4,700 level, and I would expect that we'd probably get overhead resistance from this line. Now, why would we get overhead resistance here? If I just zoom the chart out a little bit, we had a very large symmetrical triangle pattern going all the way back to 2011, and this is when we had all those European jitters. And as you can see though, this bottom line of support here, it held up a number of times, and then when we got under it, we've come up to back test that line once, and it looks as if that the asx200 is heading on up there to around that 4,720 level. So we do have a target here. That's better. Looking here on the hourly chart, well, we've got that target of around that 4,730 level. On the daily chart though, we do have that overhead resistance around that 4,720 level. But that is diagonally rising, so we may still get to that target, but we may run into a bit of overhead resistance there. We've got this large inverted head and shoulders pattern that we've still been looking at, and that target is playing out. Now, earlier last week, I was actually saying that if we do get a move up, I would probably expect that the market would come down and get a good back test on this area before proceeding up to our target. Now, it still is a possibility that we could break this green line and come down, but there's no topping formation at the moment to say that we will come back down and get a back test on this area. The asx200 head up like it did on Friday and reject the bad news from the United States about the fiscal cliff. So it's interesting times, and let's see if the technicals do play out in this move up. Overall though, the asx200 seems to be heading up to that target. Alright guys, before I forget, just pop over to this website here at tradingforblondes.com.au. It's a really good website. They often put my weekly review up on their website there, but you'll find a really good read. And if you do live in Melbourne, you can go to some events there. So give Kay a message over there at tradingforblondes.com.au and be sure to come along to one of those events, and you can meet like-minded people, the thing that Kay's got going on there. So feel free to pop past my website there at aussiecharttrends.com.au, and you can sign up to my newsletter. Occasionally I'll write up a newsletter there, and you can go past my forum here, and you can also join up to that as well and write your own articles too. Alright guys, thanks very much for watching, and I'll be back on Monday for a free daily market update.